You've got an underperform rating on the stock, correct? How long have you been there, and what have you missed here in this Twitter run?
Yeah, so we've been there a couple of quarters. I think what Twitter is responding to positively is the improvement in some of the user growth and engagement metrics. So they talked about last quarter monthly active users increased by about 10 million. That was above our estimate. They've also talked about re-acceleration in daily active user growth. That's now been kind of re-accelerated to about 14% last quarter. So I think that's the positive thesis going on right now. Maybe some of the hope trade is that the second derivative, that revenues will start to improve as well. Haven't seen that yet. So revenues on the ad side declined 11% year over year last quarter. We're still looking for down about 8% year over year in the year, although we do expect some improvement as the year goes along. But so far have not seen the revenues improve.
I mean, a lot of the bulls in Twitter at this point believe that those improved metrics, whether it be the DAU numbers, the daily active user numbers, or even the improvements that we've seen in EBITDA margin will in fact continue. Is it your belief that they will not continue, or that the overall, the ad revenues is the much more important part of the story that people should be paying attention to?
Yeah, and for our purpose, I would say ad revenues are going to be the more important number longer term. So user growth has started to improve, but we haven't seen the revenues yet. I would say at current multiple levels, around 18 times our 2018 EBITDA number. That's implying much stronger growth than we're seeing currently from Twitter. We do expect some improvement as we go into 2018, but still at 18 times EBITDA, that's pricing in much more growth than we're currently seeing from Twitter. We think is overvalued here.
Aaron, when you think about your ratings, what time frame do you think about? Because I remember just before the last earnings call, the sentiment was so negative. We raised it on this show. We raised it on numerous shows that everybody was so down on Twitter that at some point that often marks what is at least a short-term bottom. And to wit, that's exactly what happened. Do you ever get nervous at those moments when you're seeing everybody's on the same page as you, and oftentimes that's when the stock actually turns?
Yeah, I mean, definitely sentiment was pretty negative. I think most investors we talk with, at least, are still pretty negative on the fundamentals for Twitter. So it's hard to say if it's short covering is leading to the rally here. But I would say so far, we would like to see stronger fundamental improvement to get more positive. But yeah, anytime sentiment gets that negative one direction, that could mark a short-term bottom.
How would they do it? How would they? You'd like to see them grow faster. How would you suggest they go about doing it? What do they need to do?
Yeah, no, it starts with user growth, and I think that's what we've seen so far. So whether it's a Trump effect or you're seeing more political discussions on Twitter, I think, one, just having a better user interface. They're starting to make some inroads there, but just improving the UI and give users a reason to use it more, make it more of a social product versus just more of a news platform as a lot of users use it today.
Aaron, last quick question. It's going to be multiple choice. So Twitter stock is on better ground at this point. Does it, A, make it more likely acquisition target? B, does Jack Dorsey finally say, you know what, both companies are good. I'm going to step away from Twitter and move on to Square full time, and that could be a catalyst for Twitter stock? Or three, none of the above. It just goes alone, standalone company.
Yeah, we're expecting standalone near term. I mean, obviously the company was up for sale. They looked at a lot of different options. Nothing came of it. But yeah, we don't think there's a buyer at this price right now.
What if they improve metrics? What if things actually started to improve?
We're going to see a significant improvement, and I don't think we're seeing that yet. You could see things improve on the margin, but revenues could get back to maybe modest growth next year in 2018, maybe mid-single-digit growth. But I think right now the stock's pricing in much stronger growth than we're likely to see.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.